What is going on, everybody? Welcome back to another video. So today wanted to do a quick one just on how I view the market and how I see it as more of an auction than just the raw charts and candlesticks that we see. Just looking a little bit deeper, because that's what the market is really moved by buyers and sellers. And it's not whether there's more buyers than sellers, because those are always equal. There has to be a buyer for every seller. It's whether one is more aggressive or whether one is passive. So just breaking right into this with a real-time example. As I mentioned before, driven by buyers and sellers, so the market will go up until the last buyer buys, and the market will move down until the last seller sells. So we can see this action over here. When we're moving into these new all-time highs, you can see every time we peaked above a high, see a previous high here, peaked above it, failed, strong fail below. Again, new high made, peaked above it, failed, peaked above it, failed, all the way up here. And while we were doing that, let me just move this out the way. While we were failing those new highs, buy volume was fading. So to me, that's saying there's a lack of interest at higher prices, where we keep peaking above the highs and buyers are not accepting higher prices. Similar to if you're willing to buy an iPhone at $100, but when it goes to $200, there's only a couple of people interested in paying that high. There's not as much interest in it. So when there's that type of situation, the market will often move down to advertise lower prices to see where buyers find fair value, to see where buyers find balance, and maybe that's moved down and people are willing to buy it at 150 or 120, or maybe it's back to 100. Just in that basic, just general idea of it. And another factor of failing highs is also someone potentially selling those highs. So you can think of that like walking through a doorway, and every time you walk through it, someone's swinging a bat at your head, and eventually you're going to walk the other way. So that's a concept I got a lot from someone named Carmine. He does a lot of supply and demand stuff too, learning some of those concepts from him, but they are very applicable, and we saw that pretty recently here. Just pulling up my Twitter. If you guys want to follow me on there, it's just ChrisH_trades. But as I mentioned, this was on the 17th. So the market looked like this. At this point, we had been failing those highs, as I just mentioned. Buyers were not accepting those higher prices. Potentially someone selling the highs. Weak interest within those buying. So the buy, as I mentioned earlier, buying will move up. Well, the market will move up until the last buyer buys. So if no one's interested in buying at these higher prices, the market will move down to advertise lower prices to see where buyers find fair value at. So again, was mentioning how we had failed 3 highs, hinting at buyers not accepting higher prices, and just the general idea of supply and demand. Again, if you guys want to follow me on there, just ChrisH_trades. Put like trade reviews out. It's just some ideas, maybe some walkthroughs, just kind of random stuff. Just still trying to work it out. Just got to start it up a week or two ago, so figuring that out. But back into it. That's the general idea of it. So all you're really looking for in terms of supply and demand is looking for imbalances. You're looking for areas where you could have passive buyers or passive sellers stacked up, and just moving into those areas depending on what type of action you see. If you do see aggressive participants, you want to see that get absorbed by those passive participants, or you just want to see relatively weak pressure into it and see orders getting filled and respected at an area. So another little thing I just want to throw in there from today's action, which I think is pretty important. So we saw pretty weak action to start the day today. Again, weak action yesterday's pre-market, yesterday's regular session, today's pre-market, and then start the open today. Again, we saw aggressive selling. So this to me creates an opportunity for big players to trap people, because when one side gets too heavily favored, when everyone's becoming bearish, bulls are starting to turn to the bear side, everyone's just starting to say, okay, well, let's look for downside now. That's generally when you're going to see those trap moves to the upside, max pain moves to play against. So again, you can see here, aggressive, very, very aggressive selling came in as we moved down, moved into a daily gap area. Didn't quite fill it, but got an aggressive turn from buyers, aggressive selling got absorbed. And what happened? Huge move up. These are the type of moves that we see when everyone becomes bearish, and all we've seen is bearishness recently. People are going to have a bias. And you say, okay, let me look for a lower high here. Okay, we failed. Let me look for a lower high here. Not realizing that all that aggressive selling got absorbed near a gap level. Buyers turned in, pushed this market back up. And if you're just reading the charts, would have said, okay, well, maybe look for some type of upside entry here instead of playing against it, and we get a pretty large upside move out of it. So again, just keeping no bias, I think, is very important. Just reading the charts, not what you think is going to happen. I think that's extremely important. So gonna leave it off on that. This was a pretty impromptu video, a little different from what I typically do, but want to just kind of toss this in here, and hopefully this was helpful for you all, and I will catch you in the next one. Peace.